Stocks bouncing back even as many remain focused on what's happening overseas and in currency markets. But even with all of those concerns, it hasn't changed the bullish sentiment. Joe, I'll go to you first today. The bullish sentiment coming from Bank of America's Fund Manager Survey. Biggest overweight in stocks since January of 15 is what they see. The U.S. is the most favored region for the first time in 5 years. I say back to reality because I know we're focused on Turkey and what's happening around the world, but as we discussed yesterday, it doesn't change the narrative here.
No.
Does it?
No, it does not. And I think when you see an overweight allocation to the U.S., you immediately say to yourself, oh, sentiment is extended and we're going to get a correction. I don't think in this instance that's correct. I think right now, when you look at the fact that our central bank is the first central bank that's been able to remove the stimulus from 9 years ago. When you look at the significant earnings growth, I think it's warranted right now what you're seeing in the U.S. And also, think to yourself for a second, emerging markets on a PE basis are at a 25% discount to the U.S. However, factor in margins. U.S. margins, operating margins, are 40% higher than emerging markets. So you could still make the argument that the U.S. has more room to go in terms of outperforming the EM.
Okay, so Pete, has Turkey changed your outlook on whether we hit new highs
absolutely
or not, and where we go even beyond that?
No, it hasn't. And, you know, everybody's talking about the contagion and all the rest of this. I think, you know, time will tell, but certainly this is not something that has absolutely shaken me. I think what the effects have been this. We've gotten through this big portion of the S&P 500 in terms of earnings, right? Now we're getting into the retail, which is towards the end part of this whole thing. And I think when we look at that, there's a little bit less catalysts around right now that I think that actually push us to the upside. But in terms of downside, am I concerned? I think that there's reasons to have some concerns out there, whether it's tariffs and all this war, you know, the trade war that we explore each and every day. But no, I look at this in a different way, I think, when it comes to Turkey. I understand some of the aspects of where this moves out towards, Scott, but I'm not worried about it. USA is where we've been for a very long time. Talk about the strength there. And obviously, EEM, a lot of folks have loved it. They've preached about how everybody's got to be a part of it. I've disagreed. I think the best place to be still remains the United States.
Nice to see why fund managers are finally realizing the great American stock market. I mean, what we've been talking about for the last several days. U.S., the most favored region for the first time in 5 years. Isn't this the place to be? It has been the place to be. Is it going to be the place to be going forward?
Yes, yes, and yes.
Nice.
And,
nice.
And
nice.
You know, sometimes there's too much of a need to diversify for the sake of diversification. In other words, going to EM, going to Europe. What I see in Europe is a slowdown. Germany's reported some really poor statistics in terms of manufacturing survey, the core of it. You have, as you point out, it's not just Turkey, it's the emerging markets, which, and we discussed this before, which, oh no, it's different this time. They're not dollar-denominated debt. Well, that turns out not to be true. And they trade down as the dollar trades up. Dollar's going to continue to strengthen. We've had a respite with rates, but rates are going to move up. So if you want a default market where you've got to have an equity weighting, it's the U.S. I added to Apple. I still like the upside in the U.S. market. Of course, at this point in the economic cycle and in the market cycle, you got to be a little worried, a little concerned, so you got to keep an eye on it and tighten up the portfolio. It's no time to play those speculative bets.
Jim?
It's time to be playing basically the old standbys, the Googles.
Maybe we haven't seen the best of what's yet to come. I mean, you could have, GDP could even pick up. Earnings were great. Sentiment's great.
Yep. Earnings were great. And the economy.
You're going to let Turkey derail the narrative that's been built?
No, I just, you know what, we talked about this Friday. That's the last time I was on, and I really didn't think Turkey was anything bigger than Italy, which was a similar two-day issue about 2 months ago. Look, it does look to be contained, and it doesn't look like it's going to affect profits really anywhere near the U.S. Now, what could affect the profits is obviously if the China trade issues keep going on and keep getting worse. But right now, here's the key thing. We just got almost to the end of the second quarter earnings season, and the damage from tariffs was limited. It was limited to auto manufacturers and washing machine makers. We'll see as this next quarter that we're in right now transpires, as it evolves, if it gets any worse. But right now, there's just no indication that these trade issues are hitting profits. Profits are very high. They're growing very fast. Look, it's a good place to be. And one last thing I'll say on this is I'm not sure that this week retail earnings are enough to propel us higher, but it could put another percent.
Do they have to be?
Well,
I mean, how great
because
do they have to be?
you're saying we're what we're 2% away from a high.
You've seen a big pickup in the marquee names in tech.
Yep. Well,
You've had pickups elsewhere. I mean,
only reason I'm
retail's
saying,
not going to fall out of bed.
Only
this
reason
week.
I'm saying that is that that's really the only news we have right now that's stock specific, besides Cisco earnings tomorrow, is retail earnings through the rest of the week.